Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a highly requested follow-up interview from Xtract One, which was Patriot One, but now is it Xtract One. And Peter Evans is here, the CEO. And Peter, before we even get started, I'm just going to say this: what an amazing transformation of this company since you and your team have taken over the helm. I mean,
thank you,
bravo,
Tim.
Bravo. But let's start with why the name change, why the rebrand.
Well, first off, thank you, Tim. It's been a very busy couple of years, but I think it's a testament to getting hyper focused on doing one thing very well as opposed to being too scattershot. Right. I'd rather be a 70% share owner of $1 billion market than bits and pieces here. And it's starting to show the momentum and snowball for us. In terms of the name change, we acquired a company, a little while back called Xtract AI based out of Vancouver. Very, very good AI development organization. They do work on behalf of the Department of National Defense and others. And they became the kind of the heart of the differentiated value we deliver in our AI software. And so we saw a lot of things that were very attractive about them. But there was always sort of this feeling, a little bit of being, the second-class citizen when you're the acquired company. And so we thought, well, let's take Xtract AI, let's take Patriot One, let's formally merge things more properly and be Xtract One as a company. And so, that was the primary motivator and driver. There was a couple of others. We found in some places people didn't like the word patriot, or they really celebrated the word patriot. And so that's a little bit unfortunate. We found one school system that asked us to cover up the word patriot because they had some parents who may or may not complain about it. So, it's an unfortunate state of the world these days, but, our primary motivator was bringing these two companies together and feeling more like one team focused on one mission. Okay. So far, it's gone extremely well. Thank you. I like to tell people, look, it makes a lot of sense. We look at billions and billions of pieces of data through our AI engines, and we extract out of that the one key piece of information that customers need in order to provide the best patron experience and the best patron security that they can.
Excellent. Okay, so since we last met, there have been a lot of announcements with is it Oakview Group?
Oakview Group, yes.
Oakview Group. Lot of announcements going on there, Peter. What's going on?
Well, Oakview Group has been a great company to work with and a great partner. The Moody Center of Austin, Texas is one of their flagship accounts. That's going extremely well. And the results of our deployment there have been fantastic. They're saving almost $1 million a year on their operational costs for security. We had a Harry Styles concert there where people were lined up for 10 hours ahead of time. So 10,000 people all standing in front of the venue. We know what that would look like if you're trying to go through walk-through metal detectors. Everyone was in under 23 minutes with, I think, 8 of our lanes. So fantastic results. Every time Oakview Group is building a new venue, a new stadium or arena, typically we're part of that planning activity. And as you saw with the announcement around Acrisure in Palm Desert, and other venues, we also are doing very well with some of the venue management services, OVG 360. So we announced Total Mortgage Arena as an example. We previously announced Angel of the Winds Arena, and there's more and more of those coming all the time. So it's been a great relationship. They've seen the value in some of the initial deployments, and all the general managers are kind of, clamoring for the same sort of value for their environment. And of course, let's look at it at a very simple level. What's the number one thing the general manager is measured on? EBITDA and EBITDA growth. And we can assist and help driving that, as well as keeping people happy and safe.
There's a video that you guys, I think it's your video, but it's really the Oakview Group guys talking about the efficiency of your system and how if you have a venue like this, you need, and this is the security people that are talking, saying, you need to get this system, right?
Yeah, that was, I think the video you're referring to is the one by Jeff Nickler, who is the general manager for the Moody Center. If you haven't been to the Moody Center, it is gorgeous. I think it's one of the nicest venues for live music, which of course, Austin being the live music capital of the world, right? It's perfect. And again, the Harry Styles example I just gave, when 10,000 people are outside standing in line clamoring to get in, and normally that would take 2 hours or more with the walk-through metal detectors they had, and they were all in 23 minutes. And what's the first thing they're doing when they're inside? They're celebrating. Harry Styles people, they got their feather boas, they got all their other gear, they're buying beer, right? It was a great event, and they're seeing that night after night after night.
Yeah, that is awesome. So I have been, being in Vegas, we have this globe thing that's being built. It's been being built for, I think, 2 years now, but now it's getting really close to being finalized. And I believe it's owned by Madison Square Garden, if I'm not mistaken.
It is. It is.
And, I saw this headline the other day about Madison Square Garden, and I thought, this is it. I really wanted you guys to be getting that, right? Because I thought it would be a feather in your cap. And that wasn't the announcement, though, Peter. I was a little disappointed.
Well, Tim, I wasn't disappointed. We've been doing a lot of work with Madison Square Gardens, doing all sorts of trials, all sorts of testing. That's a very tough environment to work in New York, sitting right on top of Penn Station, and any of their other venues like Radio City Music Hall, the Beacon Theater. They all sit on top of subway stations in New York. They're very difficult environments, and they're smaller venues, smaller doors, a very demanding crowd. And so as we continue to work with them on what the vision was for patron experience and continuing to enhance that, not just for weapons detection, but for all the other things that happen to a patron on the way in the door, being validated that you are who you say you are, ensuring that you've got a ticket, all these kinds of things. We found that we had a common shared vision about what the future could look like for, changing that experience. And consequently, they wanted to invest in us and help us accelerate and bring more and more of that innovation to the market faster. So we announced earlier this week that that investment by Madison Square Gardens, And we're very pleased to have them as a strategic investor in the company. I think it tells us a lot about the industry that when market-leading, innovative leaders doing things like the Sphere, which is going to be the most unbelievable venue on the planet, when they've got that level of innovation and they recognize that in us, so much so that they want to invest, that's fabulous to me.
So listen, let me re-clarify. I wasn't disappointed. Actually, I was extremely pleased. And I'll tell you why, because you and I have had the conversation that if you're a small company that needs to raise capital, this is not the environment that you want to be raising capital in.
No, you're
And
exactly
it was
right.
one of my concerns that as you grow, growth consumes cash, right? I mean, that's the reality of it. You have to grow, you have to build your team, you have to fund that growth. So I was concerned because you are clearly growing at a rapid clip, and I think it's going to accelerate. That's my opinion. But if that happens, that means you're going to have to raise capital. That was my fear, right? Because in this environment, you're probably not going to get a very good deal.
Right.
So this strategic investment is actually way better news than just the Sphere in my mind. Okay.
Yeah.
Go ahead.
So Tim, I agree with you. And anyone who's got anything to do with the capital markets these days realizes it's very, very ugly out there. Debt lending, if you're, going after that, the interest rates are exorbitant, very, very high, the cost of capital. A lot of the investment bankers and the traditional people who kind of invest family funds, for example, through the investment bankers, they've all hunkered down. They're holding on to their money because people, I think, are waiting to see, okay, what happens in 2023? Does the market recover and start accelerating back again, or do we keep on bumping along in this sort of recessionary environment that we're in? So people are sitting on their money. Organizations that may have been handing on our door to put money into us a year ago, they're not going, yeah, let's just take a breath and see what's happening. So, instead of going to the traditional markets, finding a strategic investor who not only benefits from an investment on us while we're on a growth trajectory, can be a partner in terms of working on accelerating innovation, and being the first one to test it out, bring real world experience, as well as the influence that they have on all their peers. If you think about it, this is Madison Square Gardens. They probably sit down with every team a dozen times a year to talk a bit about innovation. And this is going to send a message to the rest of the pro sports leagues and teams and live entertainment venues and things like that, who are kind of watching what's happening in the marketplace. So we see it's really clean money. No fees that we had to pay, for example, because it was a private placement. So that's good news, as well as the strategic benefits of the relationship.
So let's break that down for a second, because I was unaware that Madison Square Garden had different divisions, which they clearly do. One is the investment division, right? The sport.
Yes.
And then there's the entertainment division, right? And then is there another division too, or is it just the two?
I'm familiar with those two, and that was recently done where they kind of split the company into the two: Madison Square Garden Sports and Madison Square Gardens Entertainment. And each have different aspects, and I have to confess that sometimes I get them mixed up. But one is very, very focused on the venues, right? And and within the portfolio, what a lot of people don't realize is there's Madison Square Gardens that we all know and love in downtown New York, where the Knicks and the Rangers play. There's Radio City Music Hall. There's the Beacon Theater. There's the Chicago Theater. They also own Tao Group, which has, if I remember right, about 60 different sort of hospitality locations like Hakkasan in Las Vegas, as well as, of course, the Sphere just down the road from you, Tim, right there in Vegas. And if you follow the news, there was a recent announcement that Madison Square Gardens has closed on the land in London where they're going to be building the next Sphere. And I don't know how many of these they're planning, but they've designed it in a manner, these spheres, so that if someone in, I don't know, Wichita, Kansas decides they want to build a Sphere for 3,000 people, right? They can just quickly replicate that model everywhere. So I'm sure there's the plans. I think I'd heard over a dozen Spheres that are in the planning stages in different locations, which then speaks to, again, this vision that they have to change the whole entertainment experience.
So then I have to ask myself, and this is just me doing me,
Mhm.
if they invested in you, I don't know, why would they invest in a company if they didn't really like the technology and at some point maybe possibly plan to do something with that technology?
Yeah, well, that's a great comment, Tim, and that is basically putting two and two together. There's two sides of the organization, the one that does the investing, and if I remember correctly, they own the teams, but I'll have to correct myself on that maybe. And then there's the other side that is the venues. And so what you've seen is an announcement come out from the investment side that has put an investment in us. And that's what's publicly known. That's what's publicly been announced, and that's what I can publicly comment on right now. And we're very pleased with that investment in the relationship.
Okay, so I mean, you could have done it reverse. I mean, you could have said, yeah, these guys are going to take over, they're going to be handling the sphere, and the stock could have taken off, and then you could go and do the investment. Or I don't know, you could do it this way, where
Yeah,
you actually do the investment first and then have an announcement down the road about something else that could be significant.
yeah. I mean, Tim, let's just, that's an interesting idea. Let's walk that through. Okay. If you were an investor and you wanted to maximize your return, would you announce the investment and then the purchase of equipment, right? Or would you announce the purchase of equipment, see the stock price go up, and then invest, right? It's now, having said that, what we have is a public announcement about an investment, which we are very pleased with.
Which happens to take my biggest concern off the table, which is really couldn't have been better news. So I'm excited. But let's just talk about, is there anything else, Peter? I mean, how are things in general looking for Xtract One?
Yeah, it's a great question. So a couple of kind of high level comments. If you saw our earnings announcements, our fiscal year ends at the end of July. And so fiscal 2022 was for our core platform, the gateway screening platforms and things like that. For our core platform, we did about 250% more business in fiscal 2022 than we did in fiscal 2021. Okay, so that's good. In our first quarter of fiscal 2023, we did as much business as we did in the entire year previously. Okay, so nice trajectory that we're on. We expect that trajectory to continue throughout the year. There's going to be some highs, there's going to be some lows because the market has got a little bit of flakiness to it, right? But overall, we expect that trajectory to continue throughout the year, if not accelerate even more. Now, coming back to your earlier question, yeah, we've had some announcements. We can't announce every customer. Some of them are under NDA. But, things like Total Mortgage, like Acrisure, like, some of the things that we've talked about. There's other, elements of the business that are doing very, very well. Some very nice contracts that are lining up. And I'm just pleased with our trajectory right now. I guess the best way to say it is I'm incredibly busy, as is every one of my members of my team.
All right, so right now you're primarily focused, all of the news has primarily been focused in the States, right?
That's correct.
But this is an international type deal, isn't it?
It is. So, Madison Square Gardens, of course, is an international deal. And so, they're looking for us as a company. They're looking for us to, innovate in a manner that will allow us to serve more markets. And if you think of markets outside of North America, in North America, our primary issue is a gun issue. But if you go to Europe or you go to Asia, it's a knife issue, right? If you go to, Tokyo, for example, you're going to find their primary concern are knives. And most of any kind of event that occurs is knives. Similar things, if you think of that event that happened, I don't know, about 8-10 years ago in London at Borough Market, that gentleman knifed a bunch of people.
Mm-hmm.
And so we have an advantage there. We've got a very strategic advantage that we uniquely in this market space can not only detect all the guns, but we can detect knives too. And so that makes us very, very interesting for other markets. Now, I mentioned focus and staying hyper-focused. Our focus, so far as a small company is focus on North America and focus on the gun issue that we can solve very, very well. There's more than enough business in our own backyard, but we're starting to see that demand internationally. And we will grow internationally at the right time in a judicious manner when we have an anchor account to go build our business upon. I'm not a big believer in going out and hiring 5 sales guys and dropping them into downtown London and saying, sell something. It's a very, very costly way to grow a business. But through relationships, whether it's OVG internationally, whether it's other companies that we work with like Kia or Hyundai or people like that, when someone like Kia says, okay, we now want this in these other plants around the world, right? We'll use those as an anchor account to go and then go kind of land and then expand in some of those other regions.
Right. Which is exciting.
Yeah, very much so. It is for me, because that means that essentially you're profitable from day one when you grow in those international markets. You're not pouring money in to invest in building a business.
You're being
actually
pulled in instead of trying to break in.
That's right. That's a good way of putting it.
Right? Okay.
Yeah.
So how do you, so I guess you already answered the question, because you don't see the trajectory slowing down.
No.
And I have to assume that there are other opportunities that are, I mean, we just look at the tragedy that just happened at MSU. It just seems like there's a lot more violence happening everywhere.
Yeah. There is. And it's, it's again, an interesting thing about this market space we play in. There's sort of 2 thoughts. Like, one, the violence is not going away. It's only increasing. So we're playing into an environment that's very topical and is headline news, and more people are getting more and more concerned. I think the last time you and I talked, Tim, I quoted you a statistic that there have been 5 gun incidences in healthcare systems within a 30-day period just prior to us talking. And if you look, for example, at New York, when the nurses and doctors went on strike about a month or so ago, one of their top grievances on their list of things that had to be addressed was some way of stemming the violence. No, a lot of nurses and a lot of doctors are stepping away from their jobs because they're worried about the violence and the assaults that are occurring in every hospital across North America, which is a tragic thing. We go to the hospitals to be taken care of, and if the nurses are feeling unsafe, how can the patients feel safe?
Right.
So, there's a demand that's out there to, put in place the proper technologies, not just us, but other technologies that are out there to create these safe environments in an unsafe world. And the problem is only getting worse. You look at what happened at Michigan State University earlier this week. It's tragic. It's a horrible tragedy. So we're sitting in a very interesting market space with a different approach than all the traditional approaches that were built for our world 40 years ago. The walk-through metal detectors, the hand wands, all the security staff, no disrespect to them, that was a model that worked 40 years ago. It doesn't work in today's environment. And so we're sitting with a solution to solve this problem in a seamless, touchless, frictionless, covert manner to provide those safe environments. So it's a fascinating time to be in the security world.
So let me ask you a question. With this Madison Square Garden investment, I mean, I know that it provides you capital to grow, like we said, but are you also using that capital to improve your product, to continue to expand its capabilities, I guess?
Yeah, and there's really 3 areas that we're going to focus on for use of capital. One is some growth on kind of the sales side and the sales support side. We've just got too much demand. It's overwhelming the amount of leads we generate in a day. And when we qualify those out, it's still a huge volume, more than our current sales organization can handle. So we need to invest to have more time through quality people to go serve those customers and address their needs. Then in complement to that, we have a customer support organization to ensure the customers are set up for success, right? Think of it like your own concierge or white glove treatment to make sure things are done very, very well, because this is about security and it needs good processes and good training and good people to ensure the value is derived out of the systems. And then, yes, we are going to invest in innovation. There's a lot of things like, a good friend of mine always tells me, keep the main thing the main thing. If people are writing big checks for weapons screening solutions, focus on getting that done and take all those checks in as fast as you can. Okay. But the world is going to keep on changing. So you have to keep innovating. And it's a unique differentiator that we have, that we're a very, very software oriented platform. So we can say yes to many things. We've had people come to us and ask, can you use facial recognition technology to identify that this is Tim, and Tim has been banned from the T-Mobile Stadium in downtown Las Vegas.
How did
And
you know
before you
that?
even get to the venue, we can alert on that, and we can actually make it part of the pillars and the information that says, not only is this Tim, he's been banned and he has a gun, right? Now you start to think about, can I integrate things like ticketing? Can I change things and have different levels of sensitivity? This is the CEO of the company. Turn down the sensitivity because I know he's not really carrying a weapon, right? But this is someone else who we've never seen before. They're a new employee. Maybe I want to have this kind of variable sensitivity, right? So there's all sorts of areas of innovation that you can think about that we can start to put onto our software platform. So that's a long answer to a short question, Tim, but yes, we're not going to just rest on our laurels. Companies who rest on their laurels, their names are BlackBerry, right? Their names are, any of the
Blockbuster.
Blockbuster,
Yeah,
BlackBerry. These guys rested on their laurels, and look what happened.
right. So I almost forgot. I would have kicked myself if I would not have brought this up. But I don't know if you've noticed, but since Chat GPT came out,
Mhm.
AI, those two letters have become all the rage,
Yes,
because I think people are starting to recognize what AI actually means and what it can do,
yeah,
right? And I think we're in the very early stages of AI. Would you
agreed.
agree?
Absolutely. So I've been around this kind of market and AI and SaaS companies for a long time. The biggest challenge you had with AI for many years, and why it didn't really take off, was you had to, AI models only work at three levels. You need a lot of data that's very specific to a problem you're trying to solve. You then need the engines that are designed specifically to solve that problem. And then you need a presentation layer to extract the value out of it to present to someone so they could use it. So a simple example, let's say that I'm a casino in Vegas and I wish to drive more sales at the slot machines.
Right.
I need a lot of data talking about, okay, the nickel slot guys typically sit there for 37 minutes. The dollar slots, they sit there for 2 hours. I need tons and tons of data about this. And then I need an AI engine that can parse that and then present it in a manner to somebody that says, Tim's been sitting there for 36 minutes. History tells us he's about to leave. What things can we do to motivate his behavior to get him to go to the dollar slots? I cannot use that same data, though, to go determine something else like how to get more food and bev sales, how to do this. It's very kind of specific information. Where AI is now breaking, and so you had almost like bespoke custom development applications as opposed to a product that had multiple uses. Where chat has changed the game quite a bit is there's flexibility in the platform that it can morph and adjust to different sets of needs that you need at different times. And so that's make it much more universally applicable. It's almost as if I were to go back in time and say, I had one wrench for one job and one wrench for a different job and one wrench for a different job. And now what chat has done is they've got an adjustable spanner so I can do multiple jobs. Make
That
sense?
is a fantastic way of explaining it, right?
Yeah.
Conversational. It's in it, and there you're actually able to take the Chat GPT and train it to whatever you want to train it to, right?
Exactly. And I'll go back, Tim, a couple of people have asked me, well, why did you join this company versus others that were, I looked at 3-4 opportunities. And the fundamental thing that brought me to this company was exactly what we just talked about. I mentioned Xtract AI earlier when we talked about branding. We've got this AI engine that's underpinning everything that we do. So I can kind of take it and morph it in different directions to serve different things. So if I start to think about what is the patron experience, or what does a venue like the Sphere need in 3 or 4 years from now? We may not know today, but we've got the software platform in place already, so I can adjust it very quickly to deal with that. So when I think about the future for us at Xtract One, yes, the main thing is let's sell these patron screening solutions. And once I've established that incumbency everywhere, I'm at the main entrance of every building. I'm the first point that everyone touches when they go to the building, and that's the brand moment. I can start layering on top of that incumbency more and more and more and more software, which is a SaaS model that's going to keep recurring on all those layers of software because I've got the platform underneath that allows me to do that in the future. That's what appealed to me most about coming to this company, that yes, there's a problem with security and shootings. That will create our base. Now, how do I leverage that with incremental software value that's going to create highly profitable revenue streams?
Did you know, Peter, that data has become the most valuable commodity in the world?
Oh yeah, more valuable.
It's surpassed than oil.
Yeah, absolutely. We've had people come to us and say, well, what data are you collecting? And is there any way you can monetize that to create a whole data set that helps every venue to operate better? Now, the data set isn't there yet, but the tools are there to collect it and create that data set.
Exciting company on many levels. I mean, you can look just at the one component of the company, but there are a lot of potential opportunities here, right?
Yeah.
And like we just discussed, you're being pulled into them as opposed to trying to break into them. And I think that is a very powerful model, right? So you've got a software as a service. Let's just reflect for a second.
Sure.
A recurring revenue model that is very predictable.
Correct.
Not lumpy. It solves a need, not a want, a need, right? We're talking about potentially saving people's lives.
Correct.
That's big, right? I have a really difficult time finding the risk. See, everything is risk to reward ratio for me. And I'm looking at this and I'm saying to myself, what's the risk? I mean, this is a very different company than it was 2 years ago, not even remotely close. And let's talk about the time in which you did this. You had COVID, which I'm pretty sure is the only pandemic I've had in my lifetime.
Yeah, true.
And then you went through the fastest interest rate hike period in 1 year in history, which is, one might argue that could be a challenging environment for any business, right? To go through a pandemic and then go through an incredibly fast interest rate hike cycle. And, you know, the small caps getting beat to death for 24 months, right? And you managed to do what? Grow your business, and not just a little bit. You didn't just survive this thing and hold on. You grew, and you grew at a rapid clip.
Right.
That is impressive. If nobody sees that as and have you been rewarded for it? No. I would say no. Do you feel as though you've been rewarded?
I think from a share price point of view, we did well last year. You know, well, the micro caps, you know, dropped what, 20-30%, something like this. You know, we grew, I have to look at the final number, but probably in the range of about 30-35%, you know, stock price growth from the beginning of the year to the end of the year. So I call that a win, despite all the headwinds of the recession, the inflation rates, and those kinds of things. Do I think the market has valued us correctly? No, I still think we're massively undervalued, and the stock price should be much higher. And you know, people are going to catch up. They're going to notice us. I think a little bit of that, quite frankly, Tim, is you know, we kind of tapped the brakes on doing things like investor relations. And said, look, like when I first came on board for the first year, I said, look, we've got to clean up our shop. We got to get our ducks in a row. We've got to get hyper focused on a critical market. We need to, get rid of all the distractions in the business and all these other bits and pieces. Get rid of international, get rid of all these different offices. Let's hunker down and get hyper focused on patron screening in North America and particularly the US. And even narrowing that down to primarily around arenas, stadiums, live entertainment, where there was already spend for security, and we could just shift the spend and get it much more efficient and help people do things better, faster, cheaper. So once we started to get that focus, and then once we started to get the momentum going and we had referenceability, we could talk about the Office of the Inspector General, we could talk about Kia, we could talk about OVG, we could talk now about MSG and things like that. Right? Then it's time to start reopening up our investor relations activities because we've got proof points. And so I think that as you start to see this momentum build, as we're getting out in the market more, as we're going and talking to the institutional investors as well as the retail investors, I think you're going to start to see the momentum behind the stocks as more people become aware of what the story is, the story that you and I have talked about this afternoon.
Yeah. And it is an amazingly awesome story. I think it is. So, as retail investors, the one thing that I always try to convey to people is, and the reason it's so important for me to talk to the leadership is because I need to understand what's the vision, what's the strategy to get to where you want to go. And then it really comes down to following the story and seeing if the leadership is executing. And I can say that with conviction, you are executing beyond my expectations. I would have been happy with, half of what you did. I really would have been happy with that. So when I see what you're doing, I'm just like in awe. I'm like, this is the guy. This is the guy. And not just you. I know it's your whole team, but this is the guy that came in and righted the ship. And now, and I'm just going to take this to the chart.
Yeah.
And if you look at this, you've been in a downward trend since 2018.
Yeah. I won't claim any responsibility for 2018, 2019, or 2020.
I'm not bashing you. All right. I'm saying this is just the facts. Anybody can look at this, and to anybody's eye, that's a pretty obvious trend to recognize, right? Yeah. That's a multi-year downward trend. Now, in the last, let's see, how long have you been there?
I joined 2 years ago. So basically the end of 2020.
The end of 2020. That's weird because as I look at the chart, you've been trading in a box, what I like to call a box, since, well, about the end of 2020. And if you look out, now we're in 2023, and you've got very clearly defined areas of support and areas of resistance. And you happen to be at this area of potential resistance that has acted as resistance for 2 years. You had one breakout here where you did break above it, but what you hadn't done is you hadn't taken out the long-term trend. So it actually came up to the underside of that long-term trend and it pulled back. Here's what you've done. You've taken out that long-term trend that occurred right here. And then you actually pulled back and you tested that long-term trend on the top end.
Yep.
And you bounced off of it. You tested it once. Actually, you tested it a few times and it held. Now you had a little bull flag formation there. And you're right back here at this key area of resistance. You have a 2-year launching pad, is what I call it. The box that you were in, I call that a launching pad. The wider that box, typically the bigger the move. right?
Right.
You've got a pretty good platform there. Now, I'm not telling anybody that, and I'm not guaranteeing anybody that this is what's going to happen. What I can tell you is the technical guys see this.
Yeah.
I guarantee you they see it. And if you can take out, what is that, 50 cents with conviction, and you hold above it, I would suggest that this could be the beginning of a long-term trend, but in a very different direction.
Yeah. Well, you're very right, Tim, about kind of the technical setup here. And if you look at the 200-day moving average, the 50-day moving average, and these sorts of things, we've crossed there. So from a technical point of view, it's predicting, some good things ahead.
You're talking about the golden cross, Peter.
Yes, sir.
Yes. Yeah. The opposite of that would be the death cross. When
Yeah.
the 50 crosses below the 200, that's the death cross. That's the ominous one.
Yeah.
The golden cross is, yes, that is to the technical guys, that is a big positive bullish indicator. So what do we have? We have a long-term trend that has been broken. We have the 50-day, which is this yellow line here that crossed above the 200-day. We have the golden cross. And if you just look at the slope of the 50-day, where is it sloping? It is sloping up.
Yeah.
You also come down here and take a look at something that you find interesting. That's the volume.
Yeah. Volumes have been growing steadily, and that is actually a function of our increased focus on kind of our IR activities now that we have a good story to tell that's validated.
Yeah. So you take what we just talked about and you put, I think you said it to me earlier, 2 + 2. You put 2 + 2 together and figure it out. But I will tell you this, when you can take a good technical setup and match it with what appears to be a good fundamental story, the chart is almost telling you what is coming. And from what I see, it looks to me like good things. This could be a very good year for Peter and Xtract One and the people that believe in the company, the shareholders, the stakeholders, right? One thing, and the reason I do these interviews is so that people can know who is leading the charge. You're not going to shake me from my shares. You could drop this thing to 5 cents. I will buy the shit out of it at 5 cents. Okay. You're not taking my shares. I don't have a stop loss put on this stock because I don't care where you drop it to. I'm going to buy more.
Yeah.
Because I have what? I have conviction. I have conviction in your story. I have conviction in the product. I think it solves a need, and I have conviction in the leadership. So put all those pieces together, never get in my shares, not less you're paying up big time for them. So that's where I'm at. I'm not telling anybody to buy the stock. That's not what I do. All I do is present the story. I think it's a very compelling one. I think technically it is poised for a massive breakout of a 2-year platform. And this is an exciting time. I think I don't give a shit if we go into a recession that everybody says is coming. And when everybody says something's coming, everybody knows it. That is typically when the exact opposite happens.
Right.
If it's so well figured out by everyone that we're going into a recession, odds are we're probably not. So if that's the case, and even if we did go into a recession, I would almost suggest that this could be recession proof.
Well, I was going to say that, Tim. I was going to interrupt you and say I see us as recession proof. And technical indicators aside, when times are bad, violence increases, theft increases, these kinds of things. And it's where people start to say, we're going to need more security. When times are good, it's typically where you get into refresh cycles. There's more available cash flow, more profitability, revenue growth, these kinds of things. And organizations start to look at programs that they may have parked for a period of time and said, now's our time to refresh and upgrade. And whether it's things in their IT back office, whether it's, upgrading all the laptops for all their employees, or whether it's investing in that security system that they know they need, but they've been kind of holding off a little bit, right? Either way, we found that we're very, very recession proof. From our inbound lead pipeline, from our engagements with our customers right now, we haven't seen any change in the dialogues as a result of the recession. If anything, we're seeing more of them. If anything, where the NCAA schools, as an example, really didn't want to invest in patron screening solutions for all of their football stadiums because they didn't want to anger the alumni and the donors. Now, all of a sudden, you got things happening like Michigan State and other NCAA schools, and it's causing people to pause. Same thing happening with schools. The unfortunate shootings in schools have caused all the schools to say, we've been dabbling with this, we can't afford it. Now we can't not afford it.
Right.
So down times are a great time for us. Up times are a great time for us.
Which is a pretty damn good place to be. I
Yeah.
mean, that's why I say this is, to me, this is not super complicated for me. I think this is a really exciting opportunity with a company. And we didn't even go into how your product is actually, I mean, you could sell advertising on your product. You could have vendors compete to have their name on the pillars that you're putting out front with the security on, right?
Yeah, exactly. I mean, you start to think about just basic math. So you get a venue. The venue has, I don't know, BMW or Geico or whatever, sponsoring an entrance. The only people who see that advertising are the people who go in that one entrance. 100% of every single person who goes into a venue walks through our systems. So it's really prime real estate for advertising sponsorships. So, I always like to think of what's the value proposition? Well, we've proven you can significantly lower the operating costs for security at any venue. We've proven the fans get in much, much, much faster, and therefore they're happier. So they have a great brand experience as opposed to a crappy one. When they get in faster, people buy food and beverage. We haven't been able to quantify that with a high degree of accuracy, but there is indicators that show that there's increased revenue, right? And those increased revenues create more profit for an existing fixed operating costs, right? So I've gotten more variable profitability coming in on my fixed costs. I've got opportunities for creating new revenue streams from, additional branding. It's the very unusual win-win-win all the way around for every stakeholder that's involved.
That is, see, I love win-win-win-win situations.
Yeah.
And who benefits from all of this? Everybody. There isn't, I don't see a loser, which,
No.
What more could you want from an investment? Something that is a win-win-win-win all the way around, right?
I agree.
And I do think that there are going to be things that are going to happen that are maybe you and I haven't even talked about, that somebody else figures out and says, hey, what if we did this? Maybe it'll be Madison Square Gardens that has the idea. I don't know, but I do think that it's just going to get better.
Yeah.
And this is ground floor. Where is the risk reward? The risk is that you go to zero from where you are now, which anybody that thinks that has not been paying attention. And the reward is potentially, what's the all-time high in this company? Oh, pretty high.
Yeah. All-time high was
nothing.
all-time high was about $3 when the company did some of its first rounds of fundraising on the Toronto Stock Exchange. But then, of course, post that, there wasn't a product to deliver, and then COVID hit.
Right.
So no surprise to see the downtrend, but we hunkered down. I came on board. We took inventory of everything that was required in the marketplace. We got out with a lot of customers and said, what do you need? And they gave us, I can think of one organization, we went back and did 4 or 5 different demonstrations during Ingress for one of their NBA games. And they gave us a ton of great feedback. What could you do this? Could you do this? Could you do this? And now there's a solution that perfectly fits, what they need and overcome some of the shortfalls they've seen from competitive products, because they told us this is what I like and this is what I don't like about other products. And we fixed both. Those things they liked, we made it better. Those things they didn't like, we solved the problem. So that's why we're starting to see the aggressive acceleration that we are right now.
I'm glad that we actually pulled this back, because we're going back now to just to show you something. This is how spooky, scary technicals can get. We talked about the fact that it was basing, and you had this clearly defined area of resistance, right? But what we didn't see from the earlier chart, because I changed this to a weekly time frame, we were on a daily time frame. Going back to 2017, 18, isn't it ironic that this area of resistance is right here, where you basically came down to in 2017 and 18, and that was support. Now it's resistance, and it's lined up perfectly with that area. So when it breaks, and I do believe that is going to occur, I think you're going to have a good year, Peter. I really do. And I think all your stakeholders are going to have a good year. At least I hope so. The other thing I could say to you, the technical guys, and they already know this, but this also is showing a reverse head and shoulders pattern, which would be the head here, the shoulder here, the shoulder here. The neckline would be right about where that resistance is. You take out that neckline. So that's another bullish pattern, the reverse head and shoulders. So a lot of good stuff here, Peter. I want to thank you so much for coming in and doing this on short notice. I mean, literally, it was a call and you're like, yeah, man, let's do it. So that's awesome. I mean, I want to thank you so much for taking the time, but I think people are going to love hearing what you had to say.
Well, Tim, it's always a pleasure to catch up with you. Always love doing it when we've had good news. And, I couldn't wait till we got the announcement out so you and I could talk a little bit more. And as we have further announcements, and there will be more announcements, let's you and I plan on circling back and doing an update and a refresh on kind of what the story is.
Absolutely, Peter. Thank you so much. Do me a favor. Hold on. I'm gonna pause this. I just want to talk to you for a brief moment, but really appreciate you doing this.